Namaste, Varakam, Paunara. This is Ramit, your learning partner, and welcome to my presentation, Margin in Term Loan, Part 4. Friends, in my earlier presentation, I have covered how to scrutinize the asset liability statement, the net worth statement you have collected from your directors, proprietors, or partners. Now, let us suppose you have scrutinized the asset liability and the net worth statement correctly. You have understood that the promoters are capable of bringing the promised margin in the project. Now, sanction has been made and disbursal has started. Now the question is how to measure margin in different stages of release. For that purpose, we will be using some of the tools for assessing the margin. First of all, we will use the End Utilization Certificate from CA. This measures the financial progress of the project. This is generally obtained monthly or bi-monthly or as per your sanction terms. We will also use something called Progress Report from Lender's Independent Engineer. This measures the physical progress of the project. This is obtained monthly or bi-monthly or as per your sanction terms. This financial progress report must be compared with the physical progress report and you must arrive at a conclusion regarding the progress made in both the aspects. Remember, there should not be a large variance in between these two reports. Now, there are some other tools or most popular tools for understanding the margin as well. These are nothing but your very favorite unit inspection and inspection of plant and machineries. However, these two reports are beyond the scope of this presentation and I will try to cover them in detail in my next series of presentation. Presently, we will restrict our discussion to End Utilization Certificate from CA and progress from Lender's Independent Engineer. Let us begin with the End Utilization Certificate. Now, please remember that as per latest IBA guidelines from 1st February 2019, it is mandatory to mention UDIN with date in every certificate issued by a CA. This helps us in verifying the authenticity of the certificate. This is applicable both for the net worth statement that I have mentioned earlier and for the end utilization certificate which we are going to discuss now. Now, how to verify this UDIN, where to go, where to log in? I have already given a URL here. I will discuss about the steps of this UIDN verification in some other slide which will be connected. End utilization certificate format. It looks like something like this. Sources and uses. Capital, unsecured loan, bank term loan, this comprises the sources. Land cost, land development cost, soil testing, building construction, license permission, and advance payment to supplier, these are the uses. This I have taken from a large-sized commercial real estate project. Now, there is something special about this advance payment made to suppliers. This is because this payment, the goods are yet to be received against this payment. Hence, this quantum of physical payment may not be or should not be visible in your project. And there lies a difference between your financial progress report and the physical progress report that your live will give. So don't be scared. This is just an advanced amount made to the suppliers. The suppliers are yet to send the materials. Once the materials are sent, they will be used to make the construction. However, what you can cross verify is the account statements and you can ask for the receipts if any available with the promoters. Now, what are the things you check from the CA certificate? First of all, you should check whether our margin norms are complied. Whatever is your margin, 30%, 20%. Here, as you can see, the bank loan is more than the margin. So, naturally, it is complied. Whether the use of fund matches with our sanction terms. Here, the chartered accountant will also give you a list of where the funds has been used. We must check that this end utilization are in line with our sanction terms. Here, as I told you earlier, this project pertains to a commercial real estate project. So, all these costs are very much relevant for a commercial real estate project. However, if you find something like advance payment to associate companies or group companies, advance made to director, investment made in director's account, all those things are certainly not permitted, and it means diversion of fund has taken place. So at that point of time, you should take immediate steps. We have to compare this certificate with the earlier one and understand what kind of progress has been made in the project. Now, let us suppose this certificate is dated as of 26 November 2019. This CA must have given earlier certificates as well. So you try to verify which all components there has been some progress. Let us say this component of soil testing, earlier it was 15 crores, now it has improved to 20 crores, which means 5 crores has been invested additionally for soil testing. Likewise, you can compare and prepare yourself for the next unit visit, because you will come to know beforehand which all elements have made some progress in between your 2 unit visits. Now, you have to cross-check this financial progress, as I told you earlier, with the lender's independent engineer report. While talking about this financial progress, I will also utter few words on the escrow accounts, which is applicable for large ticket size loans. First of all, there is nothing special about it. All project related expenses are routed through this account. The term loan releases and interest repayment are made through this account. No debit or credit apart from project expenses or income are permitted in this account. An agreement is executed with the company called escrow agreement. No checkbooks are issued to avoid unnoticed debit. For fund transfer is done through NEFT or RTGS. So this escrow is used for monitoring purpose and for reconciliation purpose. This is nothing but just like a current account in normal code for your bank. But these are the main key points or the features of an escrow account that you have to remember. Now friends, what is the alternate to CA certificate? Because in case of small MSME loans, this end utilization from CA will not be available. So in that case, what you must do? First of all, make the customer open an account in your branch. Tell him to route all project related expenses through the account even before the sanction of loan. If he has already started investment in the project through account maintained with different bank, get the statements of that bank. Obtain payment receipts for the expenses made in cash. Then finally, prepare a statement of expenses and its sources in line with the CA certified end utilization certificate which I have shown you earlier. That's all. Your statement of sources and uses is ready. Get it signed by the customer, and this is as good as your end utilization certificate from CA. Now let us discuss about the physical progress that you understand by reading the lender's independent engineer's report. First of all, remember this is not a valuation report. It only measures the physical progress in the project and the investments made so far in the project. This mainly deals with development of land and construction of buildings. This is applicable for big ticket loans where construction of building or factory is involved. For small ticket loan, unit visit and inspection of plant and machinery should serve the purpose. Now let us quickly take a look at how a sample live report will look like. It will have the basic details of the project. Then it will speak about the progress made in different blocks of this commercial real estate project. Which block, how much piling has been done, how much floor it has, how plinth level, plastering works, plumbing works. It will give you details of all the blocks in this commercial real estate project. And finally, it will say that this project, when completed, will be around 150 crores more or less, and the borrower has already expended around 78.53 crores. Now, let us quickly rewind and see what we saw in our End Utilization Certificate from the CA. The CA has mentioned that the total investment made so far was 110 crores. You remember, I told you that advance payment from suppliers are yet to be delivered in the project, and the physical progress up to this extent may be excused from the lender's independent engineer's report. That is exactly what has happened. If you subtract this from the overall investment, it comes to around 80 crores, isn't it? Which matches closely to the 78.53 crores which the lender's independent engineer is narrating in his report. So, we can conclude that the physical progress and the financial progress are neck to neck. They are more or less comparable. If this physical progress was around 50 crores and this financial progress was around 80 crores, then we have to seek the explanation from the company. So, let us quickly summarize how we assessed the margin brought by the promoters. It all started with the asset liability statement, then we moved to the end utilization statement, finally the progress report from the LI, and of course unit visit and inspection of plant and machinery will always remain as the most two popular tools. Let us summarize the discussion, the overall discussion throughout these four sets of presentation. Margin is always on the overall cost or the expenditure. In case of phase-wise release, margin is to be ensured at every stage. Equity or unsecured loan both can be considered as margin. In case of unsecured loan, certain precautions are to be taken. We must educate the customer to prepare a release note, release request in a proper manner. We should use the tools for measuring the margin intelligently. We must focus on creating documentary evidence by using the tools. Friends, I sincerely believe that if you follow the above points, this will save yours and your bank's interest. With that, I conclude my presentation, but I will be back soon with some next popular and common topics on credit. So keep watching my channel and subscribe to it. Till then, goodbye.